More work to be done. Let's discuss this with Peter C. Earle from the American Institute for Economic Research. Peter, welcome.
Good to see you.
So 177,000 jobs beating expectations. What's your takeaway from that piece of data?
There are a number of good things about the April jobs number. The headline number was good, as you mentioned, 177,000 versus estimates of 125,000. Labor force participation, that's essentially the number of people working, was up. Average weekly hours of work rose, and we saw a much smaller drop in manufacturing jobs than predicted, and a falling rate of unemployment. So altogether, it's a good report. And it's a pretty solid indication that while there's some softening in the economy, companies are not panicking over tariffs just yet.
The stock market liked that number rallying after that report. What's your takeaway on that front?
Well, I mean, the stock market has reclaimed its losses since Liberation Day. That's quite a feat since we were down about 15% from the February highs at the low. And now the S&P is only down about 3%. I think it's important to note that retracement came only after we had a major walk back of the tariffs that were displayed on April 2nd, and talk about negotiations. So, I mean, the market was very overvalued when we came into 2025, and so it's ripe for a pullback. But I think there's no doubt that the speed and severity of the pullback in stock prices had a lot to do with sticker shock, and the return back to where we are now had a lot to do with walking back some of the harsher terms of those negotiations.
GDP was down 0.3% in the first quarter. Is that a warning sign?
No, I mean, there's a few things to say about first quarter GDP. I mean, first, this is the first of 3 GDP calculations. We'll get the final number in June, so it's not uncommon that a mildly contracting growth number is revised upward. It happened in 2022, actually. Second, since 1970, we've had 8 recessions, but 13 times we've had a falling GDP in a quarter that turned positive again. So again, not a major thing. And then finally, I've got to add, from the perspective of the Trump administration, that's not a bad number. 2 of the factors that drove the GDP negative were less government spending, which the Trump administration campaigned on and doges about, and also a massive spike in imports over exports as companies and people tried to get in front of tariffs. That's another thing they campaigned on. But consumption and investment were good. So altogether, not really a bad number, not a disaster. President
Trump is leaning on the Fed to cut interest rates. Is that a good idea? And what would be the impact?
Yeah, the Fed that's the downside of the good jobs number. If we have to choose one, is that the strong number makes it pretty unlikely that the Fed's going to lower rates anytime soon. With a mostly solid job number and concerns that tariffs are going to drive prices up, I think at this point, if we see any action from the Fed, it'll be later in the year and probably only one cut. Originally the market had forecast about 4 cuts, but I think we're looking at possibly none or at the most 1 this year.
How critical is it for the president's team to start to announce some trade deals, even in principle, just to give some certainty to the markets and businesses?
Yeah, it's very important. I mean, that's the one thing that really the economy is suffering from right now is uncertainty. We could probably see a lot more growth if some of the question marks were taken away, and paved the way for companies to start buying more and doing CapEx and all that. I'll add this. It's likely that one thing that all these trade deals have in common is some agreement to buy more from the U.S. and otherwise close trade deficits. But we have this $18 trillion consumer market that the whole world wants to access. But I mean, if part of the trade deals involve, a nation attempts to get certain countries not to trade with China or to put secondary tariffs on China, that could heat things up again and really increase uncertainty. So yeah, it's really important that the details come out and soon.
Well, we will follow it all. Peter Earle, thank you very, very much for your time and your analysis today. Great to have you.
Thanks for having me.